Ladies and gentlemen, welcome to a new episode of the Fintech Hunting podcast. Boy, am I excited today. You guys are in for a treat. We have an industry trailblazer, but before we get to that, I always like to thank our sponsors, Incelerate, WFG Enterprise Solutions, Lenders Logics, Next Level Advisors, and FinLocker. Well, we have an amazing guest for you today. This is a results-driven executive with over 4 decades of leadership and management experience in mortgage banking from companies like Bank of America, CitiMortgage, Countrywide, Nationastar, MetLife, Stearns, Planet, and the list goes on and on. She is an industry heavy hitter. She's been named a Housing Wire Vanguard, a NEXT Powerhouse Award recipient, a woman of influence, named one of the most powerful women in fintech, an MPA Elite Women Award winner, a most powerful and influential woman, and a woman of influence. And the list could go on, but she is an incredible resource to this industry. Please help me welcome the amazing Suzy Lindblom. She is the Chief Operating Officer at Kind Lending. Suzy, welcome to the show.
Michael, thank you so much. And yeah, I've been in the industry for a long time, but as you were talking about all the companies I've been at, I've had just an awesome career. I've been so much. So thank you.
Well, it is great to have you, and we really want to tap your incredible knowledge base. I know our listeners, get out your pens, get ready to record. You are not going to want to miss this. Suzy, with all of that experience, how have you seen mortgage lending evolve over the years?
As I said, it's been an amazing, definitely showing my age, but I was in the mortgage industry before there was YouTube, and, I started out very early. We broke down all our credit docs on one set of files and all our disclosures on the other set of files. And we hand wrote that. We actually had an underwriting software. I cut our system. So it's definitely has changed from that. Now, it was amazing. We did many more loans at that time, but there weren't regulations. So that's the thing that's really changed is the regulations. I remember underwriting 10,000 and underwriters today can get maybe 2, 3, 4 files a day now. So that's been one of the big changes is all the regulations, all the different guidelines that underwriters to, remember and make sure that this loan is sellable loan. So that's one of the biggest changes that has happened. I remember when the YouTube and it was such a big deal to underwriters. One, we all thought we were running ourselves, right?
Right.
And I was a manager by that time, and I remember trying to assure everybody that we still need that human element, and that DU was not going to take our job. But it's been an evolution. I think that there's been a lot of good, and from the fintech side, I think everything that we're creating now, I think this has been an evolution that started in the 90s of bringing in fintech into our industry and getting us a little more, digital. But I don't think that we really hit our stride until this year. Until the pandemic, I think that pushed us to think a little more outside of the box. And I think in the next 5 years, which I hope to still be in this business, I'm still having fun, so I'm not going to go anywhere. I think we will see an evolution, coming through the industry in the next 5 years from the fintech side.
Well, and as you've talked about technology, and we never want to minimize all the terrible things that have happened with COVID, but I think as an industry, there are some very good things that have come out from it. I think it has accelerated the adoption of digital. Like you said, it helps us think outside the box. We had to go to remote workforces. We had to come up with a different valuation models because an appraiser wasn't allowed in a home. We had to come up with digital closing and how would we do e-notary. And I think those are all things that help move the industry forward. And I love some of your examples. I mean, I got in the industry when we were still on DOS. When I got in and we were just starting to make that transition to Windows, and people thought Windows was the greatest thing, and some people thought it was a fad. So I love hearing these stories too, because we've been in it, and I had a compliance officer that loved to brag that her chum number was in under 100, and she would talk about that because that's how long she had been in the industry, and she kind of wore that with a badge of honor.
I agree with you. My phone number is all numbers as well. There's no letter. I got mine in 1987. So yes, I agree with you. It is a badge of honor.
So we talk about technology and the evolution, and you mentioned DU. What are some of the other things that you've seen where technology has had such an impact on the industry?
Well, like I said, just having computers was key. As I said, it's still a very efficient system. It's amazing. Enormous flexibility, but very efficient in but, even in the late 80s, early 90s, early 2000s, 8 years, getting all the sales programs that products came out. You've got Spin, you've got Countrywide, I can go on. All those, the way the loan officers. And I think that was a huge success. E-disclosure. E-disclosure, I think, we started working on that quite a while ago. That seems to have now become mainstream. And I think it's about, I'm going to say 5 to 10 years for something to become really mainstream. We still have to work on our, being more data-driven on verification of employment, verification of income, assets. I don't think we're there yet. I think it's still the fear of being hacked that you have to know. I don't think the loan are as comfortable with it. It depends on the comfort of the loan officer on those products to get the consumer there. Because they're the ones that sell to the consumer and the consumer trusts them. So if they don't sell that product, I think that that's one thing that we're really going to have to is the education of loan officers. Now, I do think as more millennials come in here, we're going to see a wider adoption. We've got to bring the millennials in here. They were born with iPads.
Right.
They don't mind this digital world. This is what they're used to. So I think as the industry evolves, we're going to see more adoption. But I would say, if you ask me in the last couple of years, I think it's probably very close. I think that has changed, especially because, unfortunately, because of the pandemic. As you said, the pandemic was unfortunate, but fortunately because of it is what I mean. I think we've seen the hybrid closing come. I haven't seen you talked about appraisal. I haven't seen that evolution. I think we need to really work on how we do appraisals. That seems to be, one of the areas that we just can't get straight. And getting all that digital information that we have out there on properties, we should be able to do the appraisal process a little better than we do.
I think you made some great points there. And let's talk a little bit then. How do you drive adoption? You've been with a number of these very large organizations, very well-known and reputable organizations throughout your career. As you run operations, you have to balance people resources, technology resources. How do you help drive adoption within an organization?
I have a great story about that one, so I'm glad you asked me that question. I remember when I worked at Citi, we were trying to get underwriters to underwrite off of the system versus paper. They still wanted to print everything and, work as they've always So I go.
Oh, fantastic advice. And I hope people are taking notes because I think there's a lot of great technology out there and there's a lot of companies making a lot of investments in the technology. But if people don't use it, if there's not adoption, then it's really just technology for technology's sake.
Yeah, I think too many companies, and I think that they're right in a sense. They're looking at how to make their process more efficient without thinking about the end user experience, the customer, your real estate partner, your broker, and you have to go both ways.
Excellent point. What do you think are some of the biggest challenges facing lenders today?
Well, I think there's several. Like I said, one, we're an aging industry, meaning that people in the industry, are older. We have to encourage younger people to be in the industry. We have to give them a way to grow in this industry. You know, I have a big thing about mentoring and helping people promote within the industry, and bringing them in at an entry level job and then helping them grow. It's probably one of the phrases that my manager hears from me all the time. Okay, you've got to give people a chance. You were not born with management experience. You weren't born with processing experience. Somebody gave you that opportunity. Because, as an industry, we're so busy, we want to hire somebody with 3, 5 years experience. We're never going to grow with that. And I've had really good success in my career in helping people get into the industry at an entry level in processing. Nothing pleases me more than seeing some of the people that I started out as a setup person, and they're now managing multiple teams, processing, closing, underwriting. It's just so exciting to see that growth and help them grow. I think that's one of the problems is we've got to get more mentors out there, more training programs. There's nothing in college that you can go take. We'll get you in the mortgage. There's no mortgage degree. And so I think that's one thing that we have to do. And the other thing is, as I said earlier, we've got to figure out how to, there's 2 areas that I think that, we have to, actually 3 areas we have to figure out. One is how to get more digital and get the adoption of it. 2, how we're going to fix this appraiser problem nationwide, because we just don't have the appraisers, and that's another aging population, and we've got to figure out what we're going to do there. And then the third thing is how to connect all this technology. Sometimes I feel that we have, our LOS system, And then we have all these legs coming off of it in the top. Because, we see this shiny object, we go out to that spot, then we see this shiny object, we go out and get that place. That's thinking about how to better at that fluid.
Oh, and I have a lot of questions there, but before that, you brought up a point that I'm very passionate about, and I couldn't agree with you more. The importance of bringing in the next generation to the mortgage industry. And you and I have had discussions prior to this about the importance of coaching and the importance of mentorship. I love how you talk about one of the greatest joys you have is seeing that person grow, take on new challenges, new responsibilities, because that's what it's about. It's about us passing on and transferring the knowledge. We want people to do more than we ever could in the industry. That's part of why we do this podcast, is to share knowledge and information. So, Suzy, I couldn't agree with you more, and I could talk to you for hours just on that topic. You mentioned, go ahead.
I agree. No, I agree. Every time I bring in the younger generation and really listen to the ideas that they have, they think so differently than us. They came up in a different world. They came up in a different world, right? So, the concept of what we need is different from what we need. And we need to start listening to them.
That is such a great point. And like you said, they were born with this technology. A lot of it's very intuitive. And so too many times we don't have them part of the selection committee, the process as we're looking at new technology. And then we say, hey, why isn't there greater adoption? And for them, it's not intuitive. It's not simple to use. It's not. So I think you make some great points there. Let's talk about then, as you run operations, and we've talked about technology and people, how do you find that right balance between people, resources, and technology? Because I think the big misconception out there is there's fintech, and fintech's going to take everyone's job. And just like you said, everyone said that with DU, everyone said that with a point of sale, and everyone said that with different underwriting systems. And we're never going to replace the human value that people bring to the equation. So how do you balance and kind of mesh those two, that human and that technology side of it?
When I talk to people, especially when they start having fears that technology, one of the things I talk to them is we are in a very complex industry. There is never going to be a machine, smart enough to understand all the nuances of really life, because that's what mortgage is. We're looking at people's lives. We're looking at what their career is. We're looking at their assets. We're looking at their whole financial picture. And every situation is unique. There's very few loans that I can tell you in my entire career that if I look at it and look at this data and this data, that even 75% of it match. It just doesn't match. We're all unique. And so technology will never be able to understand all those nuances. And I also think that consumers will never go completely to allowing a system or wanting a system to make that complete choice for them. They want to talk to a loan officer. This is a huge decision for them. They want to have live people. I talk to customers all the time. And, they don't want to talk to machines. They don't want to talk to chatbots. When they are concerned about, am I going to get the house that I've been dreaming about for years? Am I going to be able to get that cash out and take that vacation or redo my kitchen that I want to do? They want that human touch. So I don't, to me, we can't ever lose that human touch. Because I think that's what comforts them in knowing that.
I couldn't agree more. And I think technology, we can leverage it, especially to do manual, redundant tasks, things like that. But it should never replace the human interaction. If anything, it should allow us to enhance that human interaction with one another and take care of some of those mundane manual things, right? Can you order credit? Can you get a direct source for data to verify employment? Sure, some of those things help the process, but to your point, people still want to talk to someone that they feel is a trusted advisor to say, hey, am I going to get that house? We see it now with such an inventory shortage. People in all of these bidding wars, and what can I do and how can it help me? And the machine itself's not going to tell them what to do. Right. Oh, that is so true. And I firmly believe that one of the next major competitive advantages is the customer experience and the relationships that we actually develop. We can talk all the technology and we can talk fintech hunting and all of these great things. And there's wonderful tools out there. But at the end of the day, it comes down to that personal relationship that we build or don't build with the borrower over the course of their life, because they're going to get a number of loans and it may be with you or it may be with someone else, and it all comes down to that experience.
It really does. I've used the same loan officer for the last 12 years because I love his customer service. And, I felt very comfortable with him and worked with him 12 years ago. Really haven't worked with him since, but I use the same loan officer for my personal loans because
Right.
of that customer service.
Let's talk a little bit about some of the other pressing issues in the industry. What can lenders do to work to lower the cost to originate a loan? You've talked about technology keeps getting introduced, but so does all the rules, all the regulations. What can we do to lower the cost to originate a loan?
I think that one of the things that we don't do well in the industry is looking at individual products. We want to grow all products into the mainstream. So, that's one thing that I've been working on is kind of streamlining some of these products. We expect underwriters to know 20 different investments.
Right.
And they're not going, that takes time. And we need to start streamlining it by product more than what we have. I think we used to do that a little more than we did, and we moved away from it thinking that digital was going to take care of it. And digital does take care of it. The AUS is out there, give us a lot of information, but there's so many unique aggregators out there now that I think streamlining by product is something that we need to look at. To going back to what you said, having the system do those tasks that are repetitive, that you don't need a human touch, and figuring out how to do that with an end product that's doing more loans by what I call exceptions, right? So I have a system that has all the rules and it spits out the exceptions. We don't do that enough. We don't build these systems where it brings us out to to all these homes pass all the rules.
Oh, I so agree with the exception base. When people really understand technology, take, people that want to automate, people that want to use AI, they try to handle the biggest challenge in the manufacturing of a loan. And I'm like, stop. Pick the easy, manual, redundant things, do those very well. And then to your point, leverage the human capital you have to handle the exceptions where thought has to be in, where experience is, valued, where they understand nuances and the demographics and what's going on in those markets and the different products. That's where it's very powerful. So, Suzy, you and I could keep talking for hours. We've got a few more minutes, and I want to make sure I cover a few more things that before we get into kind of your new role and everything. One last question I want to ask you is, what do you see kind of in store for the rest of 2021 and as we head into 2022? What are some of the things you see coming down the pike for the industry?
I honestly, I don't know. I was on the website and I heard some but I haven't read yet. That 43% of purchases in the first quarter of 2020. So I think we're going to continue to crazy companies, business housing. I'm hoping that we can let out the year and we can start looking at reassessing what our next steps are. I do think we need for me, that's something that we're going to look at how we can look at digital tools that are available and bring them in how to get us being able to from a rate standpoint, I think we're going to stay about the same. I think that purchase, I think we're going to really continue to dive down. But then again, I will tell you the last 2 years, I thought, okay, we're never going to have those effects. Never going to go low. And it always comes back. But I do think that we're going to see a slowdown of that, and I think that you'll see definitely more in the next 2 years. But from a company, from an industry standard, I think you're going to still see consolidation. And I think that, unfortunately, I think you're going to see a lot of companies, reassess their staff and what they need as the market dies down. I think that that's one of the things that companies need to look at is how they can speak to people and bring the processes together. I think too many people earlier, what I talked about, I think too many people pigeonhole people and don't look at what they can bring to other areas. And I think that we need to do more of that and again grow the industry. Because if we don't look at this differently this time, as the market slows down, we're going to be right back same place we were last.
You make so many good points there. And I think one of the challenges as more of the economy is opening up, more states are opening up, and we're kind of getting back to, this new normal. I think the biggest caution that I have for people is don't just jump in and keep doing things the way that you were doing them prior to COVID. What can we learn from it? There's a number of good things that have come out from it. Like you said, digital. How can we continue to embrace digital? We don't need to have everyone come into the branch and to get a loan, and there's ways that we can do it. So I think you make some great points there. Suzy, I would be remiss without, you can basically go to any company that you want in the industry, and you chose Kind Lending. Tell us a little bit about why you selected Kind and what you're so excited about with the future there.
Well, coming to kind lending was I knew 50% of the entire company, but quite honestly, when Stearns is legend, right? His culture, his want for having a clean culture is exactly why he named it. He really believes you can come into this industry, which is very hard industry, these people work for you. We have a kindness proceeding that people write claims on. And it's a very simple office. And we don't always go to the office. When you go there, you can feel it. And Yvonne Kitchen is the president. Her and I work together before we think alike. And between Glenn and Yvonne, one of them, like I said, coming home. But it's their energy and their passion for people that I think is going to make. I know, and I wanted to be part of it. And it's also about what we talk about growing people. You can treat people with respect regardless and help people grow. And when you have that philosophy at the top,
Oh,
I
I
no
love
one
that, the energy and
and I
passion for
wanted
people. What, Suzy, I couldn't be more excited for you. You've shared so many great insights. You are welcome back to the Fintech Hunting podcast anytime at all. You have a wealth of industry knowledge and experience. You break it down in very simple to easy understand. I know our listeners are going to go back, they're going to take notes. If somebody wanted to get a hold of you and further any of the discussions or any of the points that we brought up, what's the easiest way for them to get a hold of you?
just S Lindblom, Lindblom, kindlending.com, and I love
Suzy, this has been a delightful
I
conversation.
mean, you're not.
Thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
Michael, thank you for having me.
All right, so